everyone. Good morning from wherever you're joining us from. We are beginning off officially. I will respond to the questions on the public portal immediately we begin. We have begun. So this is going to be a pre-recorded YouTube video. You are all welcomed. You can find this video on the HFM Kenya YouTube channel. Kindly like and subscribe on the button below so that you're not left out. These videos will be very important because you could be reviewing it to see how we as retail traders and investors marry economic data and technical analysis to be much more profitable. Again, I repeat, this is going to be a pre-recorded YouTube video. Find it at HFM Kenya. HFM, your number one broker in Kenya and beyond. My name is Kefa Eric, your market analyst here at HFM, and feel welcomed. So we will begin, and we shall be admitting new members joining in as we proceed. Now, from an economic point of view, and we have repeated this time without numbers that fundamentals or economic data provide direction for us in the market, so that we use technicals for entries and exits, and also trade management. This does not actually matter your trading style. You could be a scalper, day trader, swing or position traders. Traders and investors can generally take advantage of this particular module of trading, of marrying both technicals and fundamentals, so as to find an edge or a proven profitable formula to take advantage of opportunities and earn as you learn. Now, beginning from an economic standpoint of view, on Friday, which was on the 25th of October, we had economic data coming from the two neighboring countries, majorly Canada and the United States. And in Canada, we had reports from the retail sales, and in the US, we had report from consumer sentiments, and we also had a little bit of metrics in the Eurozone, right? In summary, in the Eurozone, the unemployment rate increased. Now, if an unemployment rate increases, this will have the effect of weakening the dollar, weakening the currency pair in question. Okay, and in the Eurozone, which we see the euro medium of operation or exchange weakening because of the lower than expected, the higher than expected unemployment rate, which increased. In Canada, we see the retail sales, which quite performed higher than expected, with the previous at 1% and the data coming out at 1.4%. In retail sales, we see durable goods order increase, and durable goods could be considered as hard goods pre-ordered, goods which don't wear out quite fast. You can talk about furniture, you could talk about electronics, right? Of course, excluding transportational matter. So this strengthened the USD quite slightly, and we're going to be demonstrating that on the charts. Now, moving to the charts. Very nice. I hope everyone can see my charts. If you could see my charts, you could comment on the portal. You can see, so that I know we are all on the same path. Can you share your screen kindly? Yes, see, somebody has commented see. Somebody is requesting to record. There is no need to record in Njoroge. You could find this YouTube, this video on YouTube at HFM Kenya, and you could watch it from there repeatedly. Not only this series, but a number of series that we shall do moving into the future. Seen, nice. Everyone says seen. Victoria says seen. Nice. Everyone can see my chart, so we could proceed in softly. Let me minimize this to get it out of our way. Just a minute. Okay, so let's move in softly. So on the usual suspects, we begin with Euro USD. On Euro USD, on a daily time frame, we see price printing more bearish, and we see the particular recent lower low formed, which did not take out any significant high, as we had said in our video last week, and we see now price printing even much more lower. This again is because of the strengthening dollar in the comparison to the euro, right? And when you go to lower time frame, you'll see this even much more clearly. Now on the 1 hour time frame, we would like to see price printing below the previous lower low, confirming the bias of the strength of the US dollar moving forward, and a translation of that to GU on a daily time frame. We see price also printing bearish, and this has been the case, and majorly attributed to the strengthening US dollar, going per the economic data releases in contemporary times, which means recent. So if you go on a much more lower time frame on the GU, we see price printing low as we speak, and we see this particular low has failed to take out any significant high up here. So this would indicate movement of price even much more lower. We want to see this particular low take out this particular low, take out this particular price point right here to confirm bias in into the downside, right? And in AUD USD, we see also price behaving in the same way, again attributed to the strengthening US dollar. And if you put this with USD cross pairs, it of course would relate to the economic conditions as provided by economic data. Now, in summary, for US dollar quote currency, or the US dollar coming in second, we see price printing in a bearish manner, so it would be safe to say we look for sales. All right, it is safe to say we look for sales, so as to have a competitive advantage with the aim of earning a profit, right? For US dollar base currencies, we see it printing to the upside. Again, this is in relevance to the strength of the US dollar right now. Now, US dollar coming in fast, or the base, now we see price printing up to the upside. And this is a scenario that even when you go to even much more lower time frame, even others are having a gap, which is significant to notice because of the bullish pressure due to the significant power that the US dollar is enjoying right now, because of the blooming or blossoming economy in the United States, a scenario that we shall see also in UJ, right? So it would be safer to be looking for buys in US dollar based currencies, like we have seen in the two examples provided, in line with the economic data, which is in constant release. And remember, guys, we are banking on the US economic data which was released on Friday. So as new US economic data comes in, we'll be happy to update. We see the USD card printing price much more higher, and we see right now it is forming a retracement. So once it comes to any technical area of interest, be it support, resistance, we see this one trying to come and retest the 1.3000 resistance. It would be an opportunity to look for areas of interest and get into a buy moving to the upside. And guys, if you remember, especially on this particular pair, from September around 24th thereabout, we see price being extremely bullish, and we actually called this out on the market, on the daily morning market call. So I hope most of you took advantage of that. And as it stands, the economic health of the US dollar is much more blooming or glowing, if you may like, proving that the US dollar is gaining much more strength. Okay, moving on swiftly to the most among the most requested currency pair, which is a cross currency pair, which is GBP JPY. Many people like to trade this one because it moves quite fast, move like gold, right? We see the Great British Pound strengthening in comparison to the Japanese yen, ending the rally to the downside, or the dovish behavior that we saw in the month of July. Now price is printing higher highs. So if we go even to lower time frame, we see even when market opened this week, it opened with a gap showing buying pressure, confirming the strength of the Great British Pound in comparison to the JPY. Would like to see price retrace to areas of interest so that we buy low. Okay, for those who we have gone through technical analysis together, so that you buy low and you sell high to maximize on a risk reward ratio that is much more favorable, of course, in context to your trading style. All right, so it would be safer to buy GJ for now, right? And for those who trade GJ, you know, GJ can move quite significantly. So if it is in your direction, it is going to make you most definitely smile as a retail trader, so or investor, if you may like. So moving on swiftly to gold. On gold, we see a beautiful usual scenario where on the daily time frame we see price printing much more higher. It is important to note that gold has gained up to 30% this year alone in 2024. This can be attributed to both economic data and geopolitical events, right? For example, the most recent, on Saturday 2 a.m. in the morning, we saw Israel. I see there are guys who want to join. Let me admit them. We saw Israel. Attacking Iran, and that was in retaliation of the attack that Iran did on Israel a few weeks ago. And we saw a well-coordinated attack by Israel on Iran, and targeting three major components of the Iranian territory, that is military barracks, number one. Number two, military manufacturing industries, and of course ballistic missiles stations. Okay, now these particular attacks will have gold move in a bullish perspective. All right, and we could take advantage of this, because investors would pull their money into something that has shown much more consistency. And by investors, I mean both retail and institutional investors. Institutional also to include central banks, because of the weakening of the dollar in the global economy in context of these developing geopolitical events. We now see central banks are wanting to have reserves of much more gold, printing price even much more higher. We would all agree it's such a beautiful time to be an investor and a trader, so that we take advantage of these opportunities as they present themselves in real time. Okay, so to answer a few questions, I see Stephen Kisilu asking me, could you touch on market sessions here in Kenya? Okay, so for market sessions here in Kenya, for London, I think Kisilu, I should paste a link on this portal so that you go and check them out. Remember to convert it to Kenyan time. Just a minute. I will post it immediately I am done recording this session, so that it is not so much bombarded with information. So with that said, guys, I hope we are going to have a quite profitable week ahead, taking advantage of this particular data which is coming out in real time. Okay, so it would be nice to be shorting, in summary, USD quote currencies and longing or buying USD based currencies. And if you'd like me to be talking about indices and stocks into the future, you could comment in the portal. We would be discussing them so that we could diversify our investment portfolio. For today, guys, that is it. Remember to like, subscribe down below on this video in YouTube HFM Kenya channel, so that you're updated in real time information as it comes, and you are able to visit this particular YouTube channel for you to take advantage of economic releases as they happen. So guys, thank you. I hope you will have a profitable week ahead, and I wish you nothing but the best. My name is Kefa Eric, your market analyst here at HFM. HFM happens and will always be your preferred broker in Kenya and beyond, offering competitive products, offering 24-hour support, and with over 60 awards all over the world. So guys, thank you. I say guys are appreciating. Thank you guys. See you tomorrow, the same place, the same time, to do things the same way and take advantage of these guys, so that we can all grow in this financial literacy journey. Before then, take care. Cheers. Over and